traders, this is Blake Morrow with ForexAnalytix, and you're listening to the week ahead video for March 24th, 2019. Hope you guys and gals are having a great weekend, and I hope you're excited for this next week. The reason why I say that, it seems like volatility is picking up just a bit, but before we talk about that, let's talk about, hey, if you haven't tried us out, it's only $1 for 10 days. $1 for 10 days. Try it out, and once you do that and you click here and you sign up, download the mobile app from your app store, whether it's the Apple iTunes Store or Google Play. So this way you have our analysis, our private chat rooms, everything right at your fingertips, no matter if you're on the go or obviously if you're in front of your computer as well. All right, so with that being said, let's go into the ForexAnalytix platform now. One of the things about last week that jumps out, and this is pretty much universal, what I've been reading, and it's the obvious. We had a very dovish FOMC this last week, and what had happened? Well, the stock market rolled over, and we had the dollar strengthen, the euro reverse, and you can see the euro dollar here. The euro US dollar, excuse me, failed breakout attempt above the 114 level, and that's led us back into this unfortunate range that we've been in for so long, between the 114 to 112. So I mean, we've been there for months, pretty much the whole year, between 115 and 112. But we're back in that range. But with a dovish FOMC, we expected the dollar to continue to weaken, but it didn't. The dollar actually reversed. Then we had extremely weak Eurozone PMIs, and this is the manufacturing PMIs out of Germany. I mean, these are levels we haven't seen since 2012. So that weakness has really, I think caught the market a little bit off guard. And the fact of the matter is equities are showing some signs of weakness here. If you go into the S&P, I'll just take you over to the S&P really fast. The S&P is showing some signs of weakness here. The risk for the dollar to continue to rally is high. When you have risk aversion picking up, the currency of choice is either the dollar and then sometimes the yen, but you can get a combination of both, which then if you take it over to like the euro yen, for example, you can see the euro yen had a really big move lower. You have a weaker euro, stronger dollar, stronger yen, and now we're breaking some pretty key support in not only the euro yen. Take a look at some of these other yen pairs. The pound yen I don't really want to deal with just because of the whole Brexit situation, but look at the Aussie yen. That's a big breakdown. Ascending wedge. I mean, these spike lows are just begging, and I'm not saying we're going back to 70 necessarily, but all of this price inefficiency below like the 72 yen level, I think the risk is that we do see these levels again, and that tends to happen when you have spikes that happen during periods of very illiquid markets. Here's the Canadian yen. Look at the daily chart in the Canadian yen. I mean, that's a breakdown, pretty severe breakdown below some pretty key support levels. Will we go all the way down to 77.50 again? Maybe not, but could we see below 80? It is possible, especially with the way the Canadian dollar is acting. And then you take a look at the yen just in general, and the way that well, here, let me take you over to the dollar yen this way. You can see how the dollar yen reacted. I mean, this is a pretty big breakdown. I mean, we are testing the 618 retracement, the 618 retracement of the recent lows to the highs. But if the dollar yen continues to break down towards the 108.50, 107 level, what's going to happen to the other yen pairs, like the euro yen, like the Aussie yen? Which is, by the way, in a range which we could possibly break down here. The New Zealand yen ahead of the RBNZ, or following the RBNZ. We have the 200-day moving average just below. So these are risks that I think are starting to percolate in the market. We have the equity markets. Here, I'll just take you over to the S&P since I'm on this chart. This is if you look at the chart, and let's just talk about this chart really quick, and I'm going to just point out a few things. Everybody knew that the 2820 level in the S&P was huge. Why was it such a big resistance? Well, if you take this high here, you can see I'm moving the fibs here. So that high to the low, all right, which by the way, that low was very significant. You know, obviously you guys have been listening to this week ahead video probably, you know, for the last, you know, several months or maybe even longer before that. We had a big pivot off a major trend line. Okay, so that was a 78% retracement of that high to low. We were capped going into this week. I'm just taking the price back a little bit. We were capped this week, going into this week at the 2820 level. We broke out. Now the problem with that is that you got a lot of people long last week. You got a lot of people covering shorts. And then the problem is that we reversed by the end of the week. We reversed back below 2820. Now see this little pink trend line here? If we start breaking below this 2800 level in the S&P, that's when the risks exponentially increase of continued dollar strength and yen strength at the same time, which means that these yen pairs, whether you're talking about the Euro yen, Aussie yen, New Zealand yen, Canadian yen, they are at risk of actually breaking down, and you know, you'll see risk appetite slump. Now there's another chart I want to show you really quick that would coincide with the S&P that I think you need to be watching, and it's something I don't follow, or we don't follow on ForexAnalytix, just because of the lack of all I was going to say lack of volatility, pun intended. So here's the VIX volatility index. It's something we don't chart typically, but it's something that I need to bring to your attention, because do you see this downtrend line here in the VIX? Okay, if volatility starts to increase, that typically coincides with weakness in the equity markets. Okay, and if we have weakness in the equity markets, and we, you know, let me just draw it out here. So we start to get a spike up in volatility. Okay, we start to get a spike up in volatility like that, then that typically means that the S&P will come under pressure here. So S&P comes under pressure, dollar index responds accordingly. Dollar index becomes a safe haven currency of choice, one of them, and then you get the yen, you know, that continues to strengthen, which means the dollar yen rolls over. Because the dollar doesn't strengthen against the yen will be the strongest currency. The dollar being the second strongest currency more than likely means that the Euro yen will continue to sell off, Aussie yen, New Zealand yen. You guys can see where I'm going with this, but it's not just the S&P, and I'm going to bring up a couple other charts that myself and the traders in the ForexAnalytix community in the chat room, I pointed out Thursday and Friday, and also to the traders at the Gelos office that I actually trade for. I want to show you some other indices, not just the S&P. Take a look at the NASDAQ. So the NASDAQ challenged an underside of a major trend line and the 88% retracement. I thought we were going to actually stop around the 78%. I thought we were going to stop shy of this trend line, but we didn't. We went to the 88% retracement. Tested the underside of that trend line, looked like it was going to break out, then we got a reversal. These are outside candles, okay? Outside candles, you have dark cloud cover developing on the S&P. Look at the Dow. This is a big black candle, and I always tell people big black candles are usually followed by other big black candles. You can say the same thing about a white candle or a green candle. If you use green and red, we reference as black and white because originally when you printed out charts they didn't have color, so we call them black and white, but it's green or red as well, or whatever color tone you tend to use. You guys get my drift. Big red candle here or big black candle, it's usually followed by other big black candles. But those are the U.S. indices. Take a look at the Nikkei. The Nikkei is breaking an uptrend line after a failure at a 50% retracement, mega divergent relative strength. See this here? Mega divergent relative strength. So as we rally, relative strength is rolling over, so that means that the Nikkei is at risk of moving lower. Now, regarding the Nikkei and regarding the yen, one of the other things that we have to keep in mind, this is the end of the fiscal year in Japan. Typically, the yen will strengthen during the end of the fiscal year. So this is seasonally the time that the yen will strengthen. So you've got yen strength, Nikkei weakness potentially, stock market weakness. Buybacks are becoming restricted now, so that's another thing that you have to take into consideration as well. We're getting into that blackout period for buybacks in U.S. equities, which is another headwind for U.S. equities. Then you got again, I'm just pointing all of these things that are really at risk with the market. Now take a look at I'll take a look at the DAX. Okay, the DAX, big head and shoulder pattern. Okay, we never completed it, by the way, just so you can see here. Big head and shoulder pattern, never completed. We bounced because, U.S. indices were bouncing, so the German DAX started to rally. We got these weak German PMI numbers. Now we're starting to break down out of an ascending wedge after testing the neckline of the DAX. Again, I'm pointing out things that are signaling the potential for further US dollar strength, yen strength, and quite possibly one other thing I want to point out is emerging market currency weakness. Take a look at the US dollar Mexican peso. Now the US dollar Mexican peso, let's go over to the daily chart. We broke below this this 19 level, and by the way, I've been playing this thing to the long side. I played it to the long side on Friday as well, but I got hurt in it a week and a half ago because I was buying it over here as we were at this channel support. It broke down, I got stopped out, and I kind of left it alone. But what happened here is you broke below 19, as we slumped through there. Now we have a false breakdown. The false breakdown is also coincides with this longer term trendline support. You can see that little, well, this is a weekly candle, but do you see that hammer candle developing? This could be a real big reversal going back towards 20. Typically, emerging market currencies like, the peso, Turkish lira, which I could point out here. I guess let me see if I can go find it really quick. Here's the Turkish lira. Okay, that's a daily chart. Look at that spike up. South African rand. Where is my? I'll just type it in here. Let's see. It's not something I typically follow, but if I'm talking about emerging market currencies, you can see the rand. See that spike up? We start breaking out in the US dollar Mexican peso going the other direction. We're back above this trend line. We start spiking higher in the peso, the US dollar Turkish lira, US dollar South African rand. Those are further confirmations that equity markets might continue to weaken. So anyway, I think we have to watch that going into next week. Now let's talk about this next week. First and foremost, on Tuesday, we have the RBNZ. Now the RBNZ has been pretty neutral, but with growth slowing globally, if the RBNZ starts to recognize that growth is slowing globally and it could impact the New Zealand economy negatively, the New Zealand dollar has been trapped in this really tight range for quite some time, triangle, but we're at the upper end of it at 69 cents. The risk is we could come back down and see the 200-day moving average, which is roughly around 67. Let's just call it 67.50. And we break below that, then that becomes a bigger risk for the New Zealand dollar. But the New Zealand dollar, we are faced with the RBNZ rate decision on Wednesday morning in New Zealand, Tuesday afternoon. If you're in New York, obviously, if you're in Europe, it's going to be late Tuesday night, something that we got to pay attention to. We have Canadian trade balance on Wednesday. All right, and you see the dollar Canadian here, okay, with the inverted head and shoulder pattern, shoulder, shoulder, head, respecting the neckline. This is a complex head and shoulder pattern because of the slanted neckline, slanted shoulders. We respected the neckline, and we've reversed. This is in an up channel. The dollar Canadian could continue higher. So if we got Canadian trade data on Wednesday, that's something that could push us back up towards 135. All right, we have on Wednesday night here in the U.S. or in Europe, early Thursday morning, we have Australia, New Zealand business confidence, and then things start to pick up at the end of the week, because Thursday we have final GDP out of the U.S. We have a lot of Fed speakers. RBNZ Governor Orr speaks Thursday night or Thursday afternoon. And then on Friday, we have Canadian GDP. We also have PCE, personal spending, personal income in the U.S., and Chicago PMIs. And so important week for more data. But what I think most of us should be watching going into this next week is we've really got to be watching, these indices, and we've got, this possible false breakout in the S&P. That, whenever you get a false breakout, you get a move that was like, oh look, we're squeezing, and then we get a reversal back below that key level. That is at risk, and this is a weekly candle for the S&P, which is a shooting star. We're at risk of further downside. So, how does that translate into the FX market? Typically, it's going to be stronger yen, and in combination with a stronger dollar as well. So those are things that I think you guys should be watching out for this next week. And guys and gals, my name is Blake Morrow. And if you found this video helpful, insightful, maybe entertaining, click the thumbs up button on YouTube. It makes myself feel better. I feel good about, filming these free videos for you, and our team that does the editing, and we all just really appreciate it. And also click the bell icon on YouTube so you don't miss any of our videos as they come through, and any of our face interviews that we have. We do so many great interviews throughout the course of the week. You guys have to go back and listen to Mark Chandler from last week. What a great interview with him. We had a half an hour with him, and it was awesome. But you won't miss any of those interviews if you subscribe to our YouTube channel and you click that bell icon so you get notified via your mobile device or your desktop. And I hope you have a great trading week next week, and I will see you Monday morning on the Face webinar, on our free Face webinar with Dale Pinkert. You guys and gals have a great remainder of your weekend. Thank you very much.